Good morning, everyone. Welcome to the session and possibly to your first session at Sibos. We're going to be discussing ecosystems for the securities industry. And what we want to look at is, at this point, are we at a too many cooks spoil the broth situation or a many hands make light work situation? And we have a panelist with a different focus looking at this. Apparently, if you've got the Sibos app, you can type questions directly into that, and I'll get them on here, and we'll ask some of those. So feel free to do that at any time. If there are no questions, I may just come to the audience and ask you directly. But please try out the app at any rate. I'm sure it works really well. Now, my name's Richard Schwartz. Each of the panelists will introduce themselves when they first speak. I've been a financial journalist. Basically, I'm an old hack. I've been covering this stuff since the late 1980s. And in my old school kind of way, an ecosystem in the financial services industry is a set of processes in the middle which are supported by market infrastructure and then various layers going out to the end customer. Now, when I think of that process, particularly in the securities industry, I think of sequences. So someone makes an investment decision, they transact on that decision, somebody then picks that up and executes it in the market. Then there's a settlement process and the assets have to be administered. And there are various important structures along the way, from stock exchanges to clearing houses to central securities depositories and various intermediaries in between, brokers and custodians, etc. That, in 1989, I think it might have been 1988, there was a set of recommendations called the G30, 9 recommendations, which set up a framework for securities markets to be efficient. At the same time, ISSA, which Colin represents here, did a similar thing, and those were relatively compatible. But a lot of work over the past 3 decades has gone into building up an efficient infrastructure that caters for everything from the end investor through to the middle of the process and the plumbing. We're now at a time when, particularly with digital assets and various other technologies, we want to find out if that infrastructure is still fit for purpose in this new environment. So I guess the first question would be for Colin. In your view, is the infrastructure that the industry has built up and the associated ecosystem fit for a digital world?
Thank you very much. So I'm Colin Parry. I'm the newly appointed CEO of ISSA. And we've hit a perfect question. So the ISSA group at the moment, who are working on digital assets, are writing a paper. And that paper looks at all the areas which are presently represented through that value chain which was just described, and says, okay, in the new world, what needs to happen? And what we've done is we've taken a view which is things don't have to be exactly the same, and in fact, many cases shouldn't be the same. But what we really want to happen is people be aware of the challenges and the reasons why those parts of the value chain came into existence. So a registrar, right? What is the purpose of a registrar? What functions does a registrar have? And how can those be replicated if they need to be replicated in a digital world? So that paper will be coming out within the next couple of months, hopefully with much backing of the ISSA membership, which is about 120 member organizations throughout the world. And then we'll hopefully get some debate going with some of the new ledger technology companies which are being built out as we speak. So hopefully that's enough.
Right. Now, Todd, at
Yes.
R3, you have a specific focus on the digital world, I guess. How many of these infrastructures or bodies that we've mentioned, registrars, custodians, central depositories, clearinghouses, payments service providers, how much of those individual things make sense to you in a digital world?
Yeah, so I think we've been at this for 4 or 5 years now. So at R3, and R3 is an enterprise blockchain company that is today an enterprise software firm. We started life as a bank consortium, and this was 3-4 years back. And I think when we first started exploring blockchain and DLT, there was really 2 camps. If you looked at how to apply the technology, there was one camp where they looked at all the existing infrastructure and said, we don't need any of that. Let's just put a blockchain on it, and all the problems of the world will be solved. At the other end of the spectrum, what we struggled with, I think, in the early days was taking the existing world and mapping it one-to-one to a blockchain world, which really doesn't make much sense. We would wind up with maybe slightly optimized processes, but you'd still have much of the same problems you have today. You'd still have different digital islands that would be created. And I think it's been the last 2 years, really, where digital assets have started to really come to the fore again. When we first started, the use cases were, I would say, in the securities side of things, were frankly fairly immature because it was brand new technology and trying to figure out how to use it. And I would actually like to say a bit of thanks to all the ICO scams out there, because it really started to spark the imagination of a lot of people out there. Obviously, taking some inspiration from that, but getting rid of 99.9% of what was happening. But it really started to show what digital assets could mean for the securities world. And I think, in some of the examples that we'll be talking about, I think there's a chance to reimagine that life cycle a little bit more.
So that particular example, if you are from the old securities world and you're used to IPOs, what is different about an ICO? What am I looking at that I'm not going to recognize?
First off, I'm not an ICO advisor, so my lawyer told me.
Or their replacement,
Yeah. So if you strip it back, what were these firms trying to do? Some were pretending that they were trying to launch some sort of utility token, but really they were trying to raise capital. So it was a new and different way, slightly different way to raise capital, a different way to reach investors. And I think going back to the beginning, we're not in a world where we're trying to scrap all the infrastructure and start fresh, and we're not in a world where we're trying to map the existing into the new technology. It has to be a mix of the two. So if you think of the inspiration of a company trying to reach pools of capital, but do it in a way that is actually reaching an institutional investor class, I think that was what the big gap is. And also doing it in a way where we're tying it back into the existing infrastructure from a CSD and a CCP perspective. And I think, going back to what SIX is doing, what they're building now in the SIX Digital Exchange, that's a really good example of taking these two worlds, bringing them together, making sure you have the right regulatory backdrop, and also the expertise to know what should come over to the new digital world and what should be reimagined.
So, Eva, that's a good time to bring you in. Within SIX, you've got practical experience of looking at what you've already built up in SIX and the digital world you want to provide a service to, including, I presume, capital raising for firms. Looking at what you'd already built and looking at what you wanted to offer, was there a big gap? Is it a case of tweaking? Is it a case of doing a whole lot of new stuff?
I mean, we at SIX Group, obviously we have a wide understanding of the financial market infrastructure, running a CSD, the traditional stock exchange, the CCP, so the clearing, as well as the payment system for the Swiss National Bank. And with the SDX, the SIX Digital Exchange project, we try to do a step back and see the things we are running, what is needed, in what sequence is it needed, and where does technology help to overcome certain things which have been artificially put in between to manage risk. So, I mean, you mentioned before the sequence of trading and post-trading. There you need to have collateralization. I mean, we have seen that since 2008, the market has realized what risk is, what settlement risk is, where before the markets have been not as conscious about it. And I think the new technology allows you to take away certain risk parts and underlie them with technology. So real-time settlement, atomic swaps, risk-free trading, real-time settlement is one of that. Comes with certain advantages. You don't need a CCP anymore, so it's really risk-free. The transaction only takes part if the assets are there. Comes with certain disadvantages. How do you fund this? Real-time funding, pre-funding. We have looked into that, and we have realized, I mean, in a functional market, it's going to be a bit of a balancing act. Initially, people are always afraid if you have a real-time transaction model that you have to pre-finance everything, but it's real-time financing. And while you have to finance buys 2 days earlier, because at the moment you finance them only once you have the settlement, which is T+2, you get sell orders, the money back 2 days earlier. So it's pretty much balanced out, but obviously it needs new models around it. How do you handle that? And the way how we try to accomplish that in the industries, we are focusing on user groups, where we invite our clients, the banks, and we are focusing on a pure business-to-business model to work on that and see which models are working and which models aren't.
How much interest has the regulator taken in what you're doing?
I mean, there's a huge interest. I think every exchange, any bank is doing something around the blockchain. And I think with a financial market infrastructure provider, so a neutral party, and SIX itself is owned by all the Swiss banks, more or less. So I think there's naturally a way how we can bridge those different initiatives and for the banks, those different models they have. That's our ambition in it.
Colin, looking globally, do you find regulators are on the same page as each other, or is there a big diversity in how they're approaching?
I think there is diversity, and one of the challenges is that if you have a ICO or ITO on a digital exchange, which may be a historically based exchange or maybe a brand new one, where is that regulated? And what we saw 2 months ago was the SEC and FINRA coming out with the 15C3 rules about how they expected things, and they expect no change. They expect the client assets to be kept safely in a good control location. Now, for a new exchange with a distributed ledger, proving that distributed ledger is a good control location is hard. Right? It's not impossible, and what we want to try and do is put the rules in place to allow that to be, if you're following these 10 things, this is the likely outcome. Now, we can never say that that is what the SEC is going to rule in the end, but if we give people a good basis, at least not every single exchange that sets up has to go through that problem. So that's where we're heading.
So a question for both you and Todd. Mm-hmm. In your own organizations, where you're grouping together a wide range of institutions who are interested in this, in trying to derive a set of commonly applicable principles, how much consensus do you find? I mean, are there lots of arguments? Does everyone say, that's exactly what I think?
So I think that when you come to the digital asset side of things, one of the most important things, and this includes not just the end users, but I think the regulatory community, maybe even more so, is that we need to come together on a common mental model for what we're talking about. Because if you start a conversation and someone's thinking this is something like an ICO, that's not the mental model that the securities world is going to be implementing. So we spend a lot of time with the regulatory community on that, but also within the stakeholders across. So I mentioned with R3, we started as a bank consortium, but very, very quickly evolve to where we are today, which is an ecosystem of over 300 participants that spans beyond banks and market infrastructure, but importantly, into the regulatory community, into corporates, into lots of other segments. And it does get quite difficult to bring it back to the common mental model. So I think it's important to have things like with ISSA, trying to have some thought leadership around defining the space. We spent the last 6-8 months with a working group called the Digital Asset Working Group, which really was taking some of the learnings that we've been seeing, some of the innovation we've been seeing on the security token side, but really stress testing that with the market infrastructure side of things, so including DTCC, LSE, Deutsche Börse, SIX, Euroclear. And we recently released a report, and we have our next session, which is open to the public, I think is this week. So if you go on r3.com, you can sign up for the Digital Asset Working Group. Because this is something that's going to be a methodical campaign to get the industry to a common understanding of what we mean when we say digital asset.
Yeah, and the start of the paper we're writing actually describes those different things, because, as you say, ITOs, the whole is a payment, a central bank stable coin, is it a stable coin? All these conversations go on, and as Ivo talked about earlier, like understanding how the payments react and interact with the security settlement is key to taking out some of the risks that otherwise could occur. So we're starting with that. And to answer your question about how hard it's been pretty hard. Right? We hope to get the paper out by this week, and we failed because there are big differences in opinions. And what we're trying to do is draw away from those and say, these are options and these are the things that could happen. So as this space expands, more ideas come about and more challenges come brought to the fore where people go, actually, I hadn't thought about that. How do we deal with that in this new world? And so it's a fascinating area.
But we also have to remember, I mean, if we talk about security or digital assets, that's going to be a wide range. Right. In today's world, equities have third standard, but bonds have a total different standard. And if you look at settlement cycles of bonds, you have T+2, you have T+5, you have a variety of standards, and that's going to happen in the new world as well. So if we think about standardization, we always have to remember ourselves that in the traditional world, we don't have that much of standardization. We have certain standards, which we all have agreed in. We have standards which are given by the law, by the regulators, which still will maintain, because most regulators have technological agnostic regulations. And we also embark into new asset classes, the non-bankable assets, which become one or another way bankable. And those probably will follow, again, certain different standards. So I think that we have to remember ourselves as well if we talk about standardization.
So pressing you on that, in the world that you envisage with SDX, what kinds of digital assets are you expecting people to want to buy and sell?
I mean, given we are an industry play, we start with the most obvious ones, and that's going to be equities as well, with a market which is probably for mid caps as well. Then we do loans and bonds. I think here we have quite a bit of additional potential, and funds. That's going to be our starting points. While funds, I believe, has huge potential in terms of automate processes where at the moment many different steps are in there. I mean, for example, if you look at the TA functions which are totally decentralized at this point in time, which make it for customers very difficult to redeem a fund and get the cash back in a short period of time. So I think there are a lot of things which can improve. On the longer run, I believe very much in the non-bankable parts, be that real estate, like everybody talks about at this point in time, be it patents or be it art. So there are new ways and new asset classes embarking.
Yeah, and I think in that hyper-connected world, the more standards we can standardize rather than have T+5 and the better it is. And to me, the glory of the option for DLTs is to be able to bring everything to a T0 basis with the cash moving at the same time in a standard methodology where we can communicate irrespective of which exchange you're traded on or where you're holding your private keys. And so that standardization needs to be in place, otherwise we are going to go back to where we are now, which is everyone does things slightly differently. The theme of today is a hyper-connected world. We want to make sure it is a hyper-connected world and not a set of silos across the various countries, industries, and DLTs.
I think we have to be a bit careful, though. If you look at the topic of standards, they are normally emergent versus top-down. And one of the challenges in working in the blockchain space is we've been only at this for a few years, and sometimes it feels like we're trying to condense all of the maturation into just a few short years, where I think what we need is some implementation first to show the way for how this segment in the industry can be standardized. So I think it's extremely important for market infrastructure firms like SIX to show that leadership, to actually go out and build something, and then have those conversations around something that's actually implemented, so we can see a little bit better what is and isn't working.
Yeah, that's right.
Yeah, and then I think also we start to see, it's really, it's not just digitizing the asset. We've had dematerialized assets for 30, 40 years now, right? If we have the ability to have these digital assets where they can live within a certain ecosystem, I think the exciting part happens when they can move beyond that ecosystem, but still have the auditability or the traceability that gives the regulators comfort that they can move from one zone of sovereignty to another. That's when the regulators will get more comfortable, and also we'll start to see sort of higher velocity of these digital assets as well.
Note no questions have appeared on my iPad. Does anyone in the audience have a question or want to put up their hand? We'll come back to you at any time. I can't see the audience very clearly, so if your hand is up,
I think, yeah, that'd be hard to see.
Shout
They
out.
all raise their hand,
Yeah.
I think.
Of course, in this industry, there is an established way of creating standards, and we're sitting in a SWIFT conference. How much of that process, I know that it's a different environment where there are, it's not necessarily sequential processing, but how much of the way the industry creates standards through SWIFT is applicable to what you see coming down the pipe? I mean, you mentioned, for example, starting with implementations to get an idea, which is not really the way it works, I don't think.
So I think it's a bit of a mix, and I think it's important as well when you mentioned SWIFT. If you look at where we're seeing these blockchain networks come online today, they are very focused on the asset side of things, whether it's a digital asset or trade assets. There's a lot of trade finance networks that are rolling out live this year into next year. It makes sense that is where folks are starting, because you get the benefits of that reconciliation, and I think you can innovate a little bit faster. When it comes back to the settlement side, and especially cross-border, that's when the pace of standardization and regulation has to be really brought forward, and that's why at R3 we're working with SWIFT and with SWIFT GPI, integrating to existing settlement and payment rails, so that these new digital assets can have the ability to have that delivery versus payment that integrates to the existing world, while we're waiting for the really fun stuff of on-ledger settlement and cash tokens to allow for that atomic delivery versus payment.
Tom put you on the spot a little bit when he talked about SIX and
how great and forward-looking they are.
Yeah,
yes.
that was it. In the whole SDX project, where are standards most lacking for you to be able to be effective to move forward to the next stage?
I mean, I think we have to be a bit careful, as Todd said, with linking the technology to standard. The technology can establish standards, or we can establish standards and utilize the technology, but the technology itself doesn't need standards. In the traditional world, we can establish standards as well. Obviously, the new technology gives us a new starting point to establish standards in an early phase. I think the biggest issue we have at the moment is in the regulatory side, because we see different regulations, regional regulations, embarking slightly different even within the European Union. If we see Malta, for example, Germany, France, everybody's doing something, Switzerland obviously as well, Liechtenstein, and all of them starting to put things into law around blockchain, DLT, technology-based companies, but everybody is doing slightly a different angle on it. And I think this is technology where country burdens less and less matter, so we really need here international standardization. And I think that's the biggest step we need and the biggest step forward. And there, international bodies have to step in and come and help and support national entities with bringing these standards together.
So are we in danger of a too many cooks oiling the broth situation, or are we early enough in the process for lots of discussions to take place at a lower level and come together?
Well, I think, it all really depends. So if you think about going back to when we founded R3, it was really the first proof of concept for how to build one of these networks and how many cooks can you have in the kitchen. And so we've learned quite a bit from that. And I think in looking at the landscape now, I think there's more or less about 4 different sort of network types out there with different levels of risk, trying to figure out how to get started. Because the big thing here is not about getting to the end state, it's about getting started. So if you think of the 4 that we see, one is more akin to sort of traditional enterprise software, where a single firm is looking to implement something under one roof that's fixing a problem that they have. And this is the example for us is Wells Fargo using Corda, our technology, to build an internal platform where they can launch products and reconcile amongst their different branches, in effect. The second one is there are lots of folks out here on the floor, vendors and software providers, that have a very large install base, but these are not connected together. And one of the things that DLT does a great job is connecting the peers together, especially with Corda. So if you think of how can you instantiate a network backwards from those endpoints, and Finastra with their syndicated lending platform is trying to do that. So that's a next level of complexity, because you have to bring some people into the tent there and try to get it going. The next up is trying to bootstrap a brand new network or consortium. And take it from me, it's hard yards, right? So you have to, it's a bit of art and science. But we're starting to see what works, and there's lots of examples that are here across, especially in trade finance, where there isn't an organizing structure of market infrastructure. So it's worth the blood, sweat, and tears to bring that consortium together. And then last is launching it through an existing network. So I think now you're starting to see market infrastructure really get quite interested in DLT, because they have the existing network that they can then optimize through the implementation of blockchain DLT. They can't do it by diktat. They have to bring people along on the journey, and that's quite important. So it's getting that right mix of bringing people in the tent early without bringing too many people in too early, so that nothing actually gets started.
So, Colin, from your perspective, taking a sort of bird's eye view of the situation or the landscape that Todd just described, who do you see, is there anyone doing the same kind of work that you're doing at trying to create a coherent framework?
Yeah,
are you talking to them?
We are trying to talk to them. We have, as Todd described it, there are different ways and networks. Some of those are more open to conversations than others. But I think we are trying to talk to people and invite them into the tent as we can. And are we doing a good enough job? Probably not. Can we do more? Absolutely. But it is a classic case of you need 2 people to have that dance. And as long as we're, and anybody that wants to join the network at the moment, feel free, right? We're absolutely happy to have them on board, but that has not always been as welcomed by the other side. And that's a bit of a, we're in a unique position of taking a global view of the securities industry, and other people have a much more their commercial imperatives at the moment type thing, and they need to solve a point problem, and that's fine, right? But as Todd said earlier, I think we're going to see things develop over time. Some things are going to go forward, be successful, and those may well be the standards we pick up on and move forward. But so the world is still moving, for definite.
I've got a question here, and this is for Ivo. How did SIX decide to use Corda for SDX? What design features of a blockchain platform do you view as most important for a digital asset exchange?
Did I ask that question? Maybe I...
I don't believe so. I didn't see you typing.
All right.
I think the first important decision you need to make is, do you want to be on a public or on a private, on a permission blockchain? And for a regulated player like SIX, it was only possible to be in a permission blockchain. So in a permission blockchain, I think currently you have probably 3 big players. One of them is Corda. Then we looked a bit wider. What is important for us? Obviously, we want to be the doorman. We want to decide who can be part of that. We need to be that from a regulatory perspective. Then the notary function, so the consensus mechanism we have is going to be centralized versus the custody function. The node itself is going to be decentralized. So we do there a trade-off compared to other protocols in terms of splitting centralized parts and decentralized parts as well. That's needed if you want to be regulated like we want to be with exchange regulation and the CSD regulation. And then we did a deep dive in the functionality, and obviously Corda was the one which was the most appealing to us. And so far we have a very close interactions with them and develop it in a very good manner. So thanks to that.
Actually, that leads nicely on to, back to the question of ecosystems. That earlier on, Todd described R3 as in a particular ecosystem. Are your ecosystems all the same? I mean, we could use the analogy of tents, if you like. Are you all in the same tent, or are you in neighboring tents, or is there,
Well, I think one of the things that excites me about what we and others are doing is, in effect, we're trying to connect these digital islands together. So, and I think also when we started, we were very fortunate to get the largest global banks in the world to support us. But in a weird way, that wasn't enough, because it's not exactly solving the problems for the banks, it's for their customers that really they need to be focused on. So I think as we've evolved working with existing networks, it is incredibly important for us to be bringing different ecosystems together and trying to connect those digital islands together. And I think there's different places where these participants can still compete, and other places where they can cooperate. And so that's also what we've learned over the last few years on what are the areas where the cooperation can be beneficial for the most amount of participants. And then you have that, and then you try and shrink it down to that minimum viable ecosystem, which usually you can count on one hand for the amount of folks you want in the room to get started with on a concept or an idea, and then grow from there.
So obviously there are some conversations that you've had that bring people closer together already. I mean, the example that we were looking at earlier of SDX and Corda would be one. Who do you see in your various ecosystems who you haven't yet successfully engaged with? Not that there's been animosity, but you're not there yet, but you've got to speak to these people to make a coherent ecosystem. Is there any group out there that you really need to reach out to?
Yes, I think so. I think the central banks the central banks are still a bit of hands-off if it comes to CBCD money, so to digital way of national currencies. I think that's going to be probably the next phase. I mean, we have seen Facebook announcing the project Libra, which has created a lot of noise in the market. And I think if central banks want to protect their authority in this, which they should, they have also to start playing a role, a more active role in these ecosystems.
Yeah, I would personally like to thank Facebook and Libra for launching the way they did, because it drove a lot of reaction from the central bank community, and we've spent a lot of time with that community, and there's I think in a lot of ways a big acceptance of this technology, because there's a chance for DLT to help them do their jobs better, and they're very open and willing to that. And there's a lot of experimentation going on in central bank digital currency that central banks are involved in that we help support. But they usually have a different time frame than commercial entities, which makes sense. And it goes back to trying to figure out what's enhancing a business process and what's introducing more risk. And the job that we all have is to show that this can do both things. It can enhance the business process and reduce risk at the same time, which I think, going back to what makes it exciting, is bringing those things together. You have a digital asset potentially integrated to a real-time payment system, or potentially having those settlement assets on the same ledger. It gives the central bank community and the regulators, I believe, a much better view into their ecosystem.
Having had lots of interaction with central banks, would you like to hazard a prediction of when the first digital fiat currency is going to be, not necessarily where it's going to come from, but where someone is going to be able to use it?
When will that be?
Yeah.
You want me to make a market on that?
You can be as vague or as specific as you like.
Well, I would say that nobody knows anything, right? And I'll probably be 100% wrong, but I would say where someone can actually use it, whether it's an individual or a commercial entity, I'd make you 2 or 3 years. How's that? But I'm talking my own book, because I am part of the space. We'll see.
Yeah, I'd be happy to go for 3 to 5.
Yeah.
With no problem at all, because I think one of the things that we're pushing for is, settlement in central bank money, and as Ivo says, that can only really happen if we can do that on a distributed ledger at the same time. So I think as the needs are becoming more obvious to the central banks, somebody's going to step up there and push harder. And we've seen some great papers written by Singapore and Canada. Right? I think one of those two may be the first to go. And I know nothing. I'm not even on the inside.
You heard it here first.
Ivo, what's the attitude of the Swiss central bank to what you're doing? You're not waiting for a digital fiat currency to launch?
Obviously we are handling our operation will be on a smart contract base, so we need to have a cash leg in order to atomic swaps. So what we are discussing with the Swiss National Bank at this point in time is that we can offer a digitalized Swiss franc as commercial bank money and have the underlying Swiss franc blocked on a SIG account, so on the Swiss payment system. So that's how far it goes at this point in time, which I believe is already a big step because it's not yet central bank money, it's still commercial bank money, but still gives you the edge of using it in a digitalized form.
I think he's underselling it a little bit. It's incredibly exciting, and I think that's why the SDX project is so exciting to me. You have everything under one roof, and if you have the participation and buy-in of SNB, FINMA, and others to be able to get this done, and potentially not do it all the way to a pure central bank digital currency, but near central bank money, and to demonstrate the value of that is incredibly powerful. We
have one question here which builds on, and we're coming close to the end, so I'll bring this in now. We were talking about standardization. The question is really about whether standards are necessary for a digital asset market to mature, but more, is it the lack of standards? Are we at a point now where the lack of standards is holding things back, or are we still at a sort of let 1,000 flowers bloom stage of development?
Well, to answer both questions, one, I think it will be necessary for the market to mature to have a set of standards, but at the moment we're not ready for them. So I am still of opinion, let 1,000 flowers bloom, but let's bloom in roughly the same direction.
So there is standards work going on out there. So I mentioned on the technology side, I think it's quite important to understand this is what a digital asset or a token looks like on one of these blockchain platforms, and that's what we can focus on at R3. But there's standards work that's going on out there. If you look at the derivative side of the world, with ISSA has been working on their common domain model with the industry for the last 3-4 years. And these models are out there, and I think the ask is of the community to pick up and support these standards that are already in the public domain. And there's a lot of work going on with that. But it really is about the participants to be able to pick it up and implement these standards.
And so Clive Ansell from ISSA and I were talking a couple of weeks ago, and we agreed that we'll have a joint ISDA and ISSA working group to look at those data models, because I think it is necessary to move collateral in an OTC world. You need the securities involved as well.
That's great to hear.
The SDX is obviously trying to generate some standards around the banks on our platform. That's what we do, but I think the lack of standard is not holding us back at this point in time. The ecosystem as a whole still needs to grow overall.
Right, okay, we're almost out of time, 14 seconds left, so thank you very much, everyone, and thanks for coming. I hope you enjoyed it.
Thank you.
Thank you.
Thank you very much.